median household income in the United States by ethnic group. It's surprising, actually, but I guess overall average is impacted by immigration. So what's the number one issue for most of these people is that they are recent immigrants. However, at the very bottom, we have both Hispanics and African Americans at the low end of the totem pole. At the very high end are groups that the best thing I could say is that they're extremely cohesive as families. I think that's a good way to put it. Mutually supportive. And of course, Indian Americans have a very strong school system that is very competitive. They happen to have a democracy as well, which is pretty cool. Take a look at the percentage of population with a bachelor's degree. Indian Americans, 70%, US average, 28%. But that doesn't necessarily mean that they're going to be high on the wealth. For example, Korean Americans, they're below the white Americans, and yet they have more bachelor's degrees. So I don't think that's all of it.
Hello, everyone. Welcome to the CEO briefing. And one of these days, I'll figure out how to not replay the video when it's already played once. So welcome all to the last February, the leap year February CEO briefing. And it's nice to see so many of you here. Let's jump right in. Water the Blue Gold, Thursday, February 29th. And by the way, Water the Blue Gold is on track to become a registered trademark. It's one of our very strong trademarks. Briefing number 251. One of these days, I'll do a review of all our trademarks, kind of cool, and where they stand. Okay, the usual disclaimer and safe harbor statement. And let's jump right over to X. X marks the spot. Well, I'm happy to report Clayton Meeker in the Modular Water Systems has been reporting. If you go to CLM 1403, I would follow him because he is doing a great job of reporting on the latest installations. For example, this is an uplift wet well via a pump station and valve vault. Can't wait to see this one deep underground and supplying clean water. So this is actually uses a pump station and a valve vault to get water up from very deep in the ground. Here it is. Very nice work by Modular Water. Really nice work. I'm astonished by the quality of this work. Beautiful. Doing their part. Beautiful. All right. I was on the Money Seed podcast. We will get more about that soon. And I'll let you separately read my little homilies, but I'll stick with the hard news. House prices. What does this mean? Well, the US is actually doing pretty well. Sweden, not so good. Australia doing well. Germany kind of wobbling. New Zealand flat. So I think what we have here is after the catch-up factor of the COVID, post-COVID, we're seeing things settle out. Of course, it's not necessarily an indication, high house price is not necessarily an indication of a good economy. For example, people buy houses defensively to protect against inflation. So make of this what you will. This is interesting, immigration. So out of all the countries in the Western world and Asia, we have only the US is seeing an increase in population. And much as I am blown away by the horrible lack of control of our border, it does achieve one thing, and that is that it is revitalizing our population. I just wish that it were done in a more secure manner, that we had the slightest clue of what was coming in. I saw a headline the other day that Venezuela, their crime dropped 20% when they exported their gangs to the US. How wonderful. It's good to know that we're there to help Venezuela. Think about it. Your water bill is not that much higher than a poor person's. You're using about the same amount of water, right? So think about the poor person. For them, the percentage of their pay is ridiculous.
Oh, I know.
So what's going on with that? Well, basically, the utilities are trying to fund themselves because nobody's funding them. They are running negative about one Ukraine war per year, $100 billion. In the United States, it's a $100 billion unmet requirement for water treatment and water infrastructure.
They're not getting the funding. The big $1.2 trillion infrastructure bill allocated 1/2000th of it to water.
Really?
55 billion.
And you think about all those wastewater treatment plants. I mean, they're huge. You drive past, every once in a while you get lucky enough to drive past one, but they're massive.
The mistake that was made is that back in the 50s, when everything was being centralized, earlier than that even, they were like, oh, let's send all the dirty water to one place.
Yeah.
But the problem is you overwhelm that one place.
Unfortunately, very, very true. One of the world's biggest cities may be just months away from running out of water. Mexico City is in deep trouble. Now, I would love to help Mexico City, but they got some major problems. The biggest problem in Mexico is non-compliance. We have a good friend who operates a water treatment company in Puebla, Mexico, and his clients are the Anglo companies. The Mexican companies don't care. They just dump it. So as a result, you run out of water. And this is, I'll be talking more about this concept of save the planet, recycle water, because if you don't recycle the water, then you're going to be in trouble. So that's unfortunately the case here. There's a documentary, fascinating experiment is being done.
Hopefully soon the planet will change.
Our government cannot be counted on to defend us from an industrial food system that's actually making us sick.
What we've tried to do here is to take natural biological processes and accelerate the regeneration of soil.
So you're doing in 4 to 5 days what nature would take
In about 400 years.
400 years.
Yeah.
Wow, that's pretty amazing. 70% less water, 2.5 times faster growth, 50% less fertilizer, and over land that nobody's using. There's nothing about that doesn't make sense.
They had no intention of hearing any of our ideas.
They're just not listening.
Worry about it getting squashed before it gets out.
What actually was burning in there? That's the question I have.
It is a war against all species, since you're bringing war chemicals into food production, and all they're doing is killing.
Anytime you engage nature in a fight, you're losing.
Agriculture can either erode our planet to the point of no return,
biodiversity is biosecurity,
or it can become a regenerative force to heal our soils and create true food security.
What? I'm going to go back and make video games? I mean, how meaningful is that? Right?
That is The Need to Grow is a documentary well worth watching. It's fascinating. And they've shown that you can grow crops on a minimum amount of water. So why not? Well, there's reasons why not. So
back in 2015, 2016, I was early prophet of decentralized water. And everybody's like, huh, what? What? What do you mean? And nobody cared. In fact, recently, a water trade, Water Online, which is the biggest one, published an article on decentralized water is great. And I pointed them to the same article that I wrote 7 years ago in the same trade about decentralized water. And guys, I wrote that same thing. But, such a thing as being too early.
Yeah.
But the good news is you get good, right? Being too early is good because if you can survive it, we have very good investors and we take good care of them. As a result, you can be there in the space kind of almost idling.
Right.
And then when it takes off, you're there.
But the important point is idling, but learning. The lessons that you learn at the beginning.
It's a microcosm, really.
Yes.
Exactly.
So that's what happened back in the day. And this is decentralized water infrastructure in lessons. We exported our hard labor products and went into consumerism and debt, but we couldn't export the building and maintaining of our water infrastructure, obviously. So that has just been decaying. So time for self-reliance in water management. This is an interesting little illustration of decentralization. And this shows us a centralized system and a decentralized one. Now, this multi-point STP, that's spanning tree protocol. It is an IT term. And what it means is basically that it's a way to address all the points in a network without looping, because networks have redundant nodes in case one of them breaks down, but you don't want them constantly looping back and forth to each other. So a multi-point spanning tree protocol is a way to efficiently build a network. A decentralized water really is a network, isn't it? It spreads the workload out to business, industry, agriculture, and neighborhoods. That's a beautiful thing. Food prices relative to consumers. Food costs are back up where they were 3 decades ago. So in 1991, U.S. consumers spent 11.4% of their disposable personal income on food. And now we're back there. So not a good picture. At the time, there'd been an inflationary period in the 70s and food prices were still high. That is back anyway. And then we're getting close to the end of the thing. Now, this is fascinating. This is what happened in Weimar, 1914 and 1923, with the gold price. And this is what happened to the percentage gold price, which went crazy. And it just went through the roof eventually. Doesn't that remind you a little bit of Bitcoin? Because that's the point being made by this post. Whether that's true or not, definitely we are in an inflationary spiral. Cities warn of funding struggle as EPA prips drinking water rule. This is the point I've been making again and again. Cash-strapped city water systems are struggling to envision how they'll pay to filter forever chemicals out of drinking water in light of an EPA rule that could be finalized as soon as March. Why not have your polluters do it? Seems so simple, but hey, I guess I'm prejudiced. So this is the issue really is that there's no way that cities are going to fund this. And at some point, the obvious solution is make the polluters clean it. It seems ridiculously simple. But anyway, I'm not a politician, but it seems like we're doing the right thing by implementing decentralized water treatment. All right. So that's the story. Okay. Now, I promised you last week that I would review the fairness opinion in the S4. And I have very strict rules. I can only say what is in the S4. So I'm going to pull up the S4 that I've highlighted the sections, and that's what I will be going over, and realize that I'm extremely constrained as to what I can go over. So with that, I'm going to go ahead and Benchmark is the company that did the fairness opinion of this merger. And on October 23rd, they reviewed just prior to the business combination agreement, and they rendered an oral opinion, subsequently confirmed in writing. And based on various points of view, that it was fair to FRLA, which is Fortune Rise Corporation. FRLA is their ticker symbol. It's fair to their public stockholders that are not affiliated. All right. And there is the full text is available as NXG to this proxy statement. They reviewed a number of data points, and what they analyzed really was several financial analyses. The first one was based on selected public companies. The second was precedent transaction analyses. And thirdly was discounted cash flow analysis. So what does this mean? Selected public companies. Benchmark chose an array of companies that they met certain criteria, and they concluded based on this, the revenue multiples observed for these companies, that put the equity value range for Water on Demand Inc. of 38.3 to 61.2 million. Now remember that we've been assigned a $32 million valuation, which is extremely conservative, which is actually a good thing in my opinion. Okay, secondly, precedent transaction analysis. And these are transactions that occurred in 2023, 2 of them in 2023, 1 of them in 2021. And again, $28 million to $40.9 million value range. Discounted cash flow analysis, DCF. So consolidated revenues increasing, blah, blah, blah. And they did a sensitivity analysis, and they came up with 35.7 million to 62.5 million implied equity value range. So we're definitely at the low end of all of these. Summary. So the implied equity stake of FRLA's non-redeeming stockholders, assuming no redemptions, is calculated to be approximately 44.5%. 90% redemption, it's approximately 7.4%. Either way, the stock price after the business combination is expected to range between 6.25 and 13.31 per share. Well, there's a bunch of disclaimers, so you should do your own reading, do your own research. But this is what drove the whole merger, was this fairness opinion. Keith Rudin says, the simple answer is usually the best. Sometimes you just have to wake people up to the facts. Isn't that the truth? All right, so let's continue here. Now, I wanted to let you all know that, about a month and a half ago, I went to studios in Largo, Boom America, and participated in a program with Kevin Harrington. And here he is, the inventor of the infomercial, the man himself. He does not look 50 plus years in business. Oh my God, it scares me. But nonetheless, he is inventor of the infomercial, Shark on Shark Tank, etc., and has accomplished over $6 billion in sales. One of the most notable ones, as he tells it, is that he took the stock price of Celsius, which is a sugar-free energy drink, from 10 cents to $250. From his lips to God's ears, was all I can say. What I wanted to let you know is that we are in talks to work with him on the crowdfunding that is coming. In other words, we really want the crowdfunding to make a splash. And that is the plan. Now, also, we've been working on a new mission statement, which is save the planet, recycle water. Because when you think about it, how come it's been so hard to tell the decentralization story? Well, the reason is decentralization is not a benefit. It is a process. It is a means. The benefit is that you have the potential to recycle water. It's impossible to recycle water unless you treat the water yourself at the point of use. America recycles only 1% of its water, whereas Israel, 90%. Now, Israel does it all centrally because they have a much more modern infrastructure. But being that we're stuck with an old infrastructure, the only other way to do it is to create a more modern infrastructure on a distributed basis at the point of use, and therefore recycle water. I mean, we have no right to complain about drought if we're throwing away all our water. Seriously. All right. Let's have a quick Money Club Mondays, part 2. And here's Mr. Ken Berenger. Let's see what he's got to say.
Here's the major difference with water on demand versus other similar asset. Real estate, there are no vacancies, there are no foreclosures. And with oil and gas, there is no exploration risk. Water and sewer rates actually outpace college tuition in terms of inflationary impact. With water and sewer rates, it actually exceeds that. It's on pace to do it with as much real-time change as is energy. But everything is clean. You'll collect those revenues, ad infinitum, 20, 25 years. Now, what's interesting is we formulated this idea, and it was really just a concept. We had modular water kicking butt, we had progressive water kicking butt, but then we had this fintech idea of how to make it all happen in the cloud. Now that we've merged these three things, this is a fully functioning, fully operational company ready to go. You're going to be granted, in addition to your 25% net profits, we carved out 10% of water on demand. 10% of that company is going to go out to the investors. The first 20 million, we're about halfway there. So you'll get a pro rata share of water on demand. So it's worth more than what you invest in the equipment as soon as it hits the market, in theory. And then secondly, you're going to receive a second grant of stock. Now, this is in the parent, OriginClear. OriginClear has now positioned itself successfully, I might add, as an incubator. So OriginClear has now distinguished itself as a successful Aquatech incubator. The first 3 projects it's put its hands on, it's now graduating to NASDAQ, right, for a major equity event. So you're going to get a grant of the parent company. Now, the parent company does trade. It's on the OTC, right? It's still just a penny stock, but it's going to own a massive portion of water on demand when it hits the market. But you're going to get a grant of preferred shares that's worth 1.5 times what you have in the equipment, okay? And it's preferred in the sense that it's price protected. Stock goes up or down, it's worth 150% of your investment until you decide to convert. At the day of conversion, it's 150%. Now you're in the market. It either goes up or it goes down. So you could literally part with it. You could part with 100% of your principal and then maintain the rest. So essentially what you got is you have equipment, you've got long-term income, you've got what could be a very near-term liquidity event with the offspring company, Water on Demand. And then you have a second grant worth 1.5 times your investment in the parent company.
We have two things that we do with Water on Demand. Number one, is currently its biggest shareholder. We have a majority of Water on Demand today. And even after the merger, we will likely hit its largest shareholder, number one. Number two, we are the source of the management services for Water on Demand. And this is what is cool about our model is when we take a company, we accelerate it through to some kind of exit, we provide the support services so they can be a company light, right? This is very important because you don't want startups to be worried about all the administration and so forth. We take care of it for them. Now, what is the special sauce that OriginClear brings? Because there's incubators everywhere. What's so special about us? Well, we have developed a real strength working with everyday investors. We believe strongly in accredited investors and also crowdfunding investors. I think our investors today, those who've stuck with us, are very happy. Conventional opportunities to make money as an investor are few and far between for everyday investors. So where can we get pre-IPO opportunities, right? Ashton Kutcher was an early investor in Airbnb. He made 157,000% on his money. Excuse me.
We are the target, right? I'm in my 50s. I'm an accredited investor. I've donated $1 million over the last 10 years to ideas that were incredible. Still waiting, okay? Because the structures themselves weren't far enough along to be anything other than purely aspirational, and they weren't really defensive. It's like playing poker and relying on a straight flush in order to win the hand. You just can't play poker that way. They were forcing investors to play poker, or they were simply funding it straight to the VCs first. VCs would, of course, gorge themselves on new deal flow, right? Airbnb, the first round made 157,000%. The second round, it was a staggering drop. Listen, most people would still jump at the opportunity, but the last round was 60% on their money. Okay. And if those of you who know about Airbnb know that in 2020, we had a thing called COVID, and Airbnb, the IPO was in genuine risk, right? Silver Lake Partners had to jump in at the last second with $1 billion cash infusion just to keep it alive. So folks like us don't really get deal flow like this. We've turned the opportunity completely around. We've actually positioned accredited investors first because we're not trying to raise $500 million. We can incubate these companies for $10 million, $20 million, $30 million, which is very manageable, even one investor at a time. Our average investor has several $100,000 invested in this idea. You only need a few hundred of those, which even as a one-man army is very, very manageable for us. So that is our superpower.
Maybe talk a little bit about what are the risks, what are the exit strategies, the terms look like, maybe talk a little more on the investor side, what this looks like for anybody that has money on here. And just as a reminder, things like this, investing with like a self-directed IRA is you have a lot of people that do that, right?
Sure.
Self-directed, using a policy, we're looking at these different, so like the stuff we talk about all the time on Private Money Club, we're looking at making that spread. We're looking at, maybe hedging out of the markets with these all-time highs. I saw the market was taking a bath this morning. I haven't looked this afternoon if it's rebounded back, but they had all-time highs again Friday, back down today. Just, my opinion this year, we're going to see this market just really roller coaster and start to pull back. So, the whole idea of Private Money Club is where are these alternative places we put our money now? We do focus a lot on real estate, just so you guys know too, Riggs, direct lending on real estate deals, flips, development deals, things of that nature. So maybe you could also just talk a little bit about just some of the differences, investing through something like this as opposed to like a real estate deal.
So I see a couple of questions: risk, terms, exit strategy, and what's minimum investment. I do speak a lot to real estate investors. If, when I grow up and when I retire, I'm just going to play real estate. I love real estate, right? I own a bunch of single family homes right now. I'm going to move into commercial real estate. So I often refer to this as, this is set up to where, you buy a multi-unit property, and your rent rolls do what? You don't get wealthy. You completely monetize your outlay, right? It covers your mortgage payment, taxes, insurance. Sometimes there's a little money left over. Generally something breaks and, it goes towards that. But the point is that you're locking in $2022 or $2023 or now $2024, knowing that the dollar will be far weaker 40 years from now or 30 years from now. The value of that property may be 10 times what it is today, but it still buys the same amount of goods and services in the future as it does today. So it's a way to kind of freeze dry your net worth. Well, that's what these payments, these royalties are designed to do. Not necessarily create a whole net worth event, but keep your income ahead of inflation. Now, what real estate doesn't have, okay, it doesn't have built-in exits very often, unless you're very fortunate and you buy something with mineral rights and you hit gas on the property or something like that. Very rarely has a life-altering potential liquidity event. Having this company graduate to the NASDAQ, you asked about risks. Well, I designed this for me. I'll be 57 this year. As I said, I donated a lot of money to great ideas that I'm still waiting on. The only thing I haven't lost money on, guys, is real estate. Now, I'm not killing it, right? And when renters go bad, it's a hassle and all that stuff. But generally, I know that no matter what I put in real estate, it's going to be there 10, 20, 30 years, and that's for my children. So I built this with me. I still want to turn a little bit of money into a lot of money, but I'm a little more chicken-hearted at 57 than I was at 37, right? So the risks on this are that if everything we're attempting to do were to fail, it would put the shorter-term liquidity events at serious jeopardy, or certainly extend them for a long period of time. That's inherent in any investment. However, preferred stock preserves your principal. Okay, so there's two equity events here. There's a grant of the actual company that is now graduating the NASDAQ. End of Q2 looks like about where we will be. So that's your first exit. Your second exit, which might be simultaneous, might be shortly thereafter, might even be before, is the grant you receive in free shares of the parent company. Now, why is it so generous? Well, it was done when Water on Demand was literally an idea. It was just aspiration. But because we were putting investors that have millions of dollars with us and have been investing for years and years and years, we saw no need to change it and make it less generous to reward the folks that have been with us forever. As we graduate to a new phase in our life, we probably will likely do that. So the exits are months, a couple months out. Even if you sell all your shares in the both Water on Demand and OriginClear, the revenue generated by the pay per gallon, that stays.
But your fund investment continues to generate royalties. And
Right.
we do plan an exit from that.
Which we're building now. Yeah.
Which we're building. It's a marketplace that's future, and we're not currently publicizing it, but there is an exit from that as well.
The whole point is this. Every dollar you invest, you're receiving $2.50 worth of stock, both of which have very near-term liquidity events. $2.50. So the point is, even if you didn't exit on your revenue generator, this would be, for your real estate investors, it'd be the opportunity to sell the apartment building and continue to collect the rents for the next 20 years. So that's, and of course, significantly greater leverage and upside than just selling the property for some small premium above what you paid. This could be a many X type scenario. We've been very meticulous in how we've laid out this exit and what elements add to the very rich upside on this. And that's something that's a little more granular, requires some context, but I would be happy to discuss that with any of you in a one-on-one interview.
Hey, so I guess what does that look like? Like, what, if somebody's interested in investing and getting started with you guys, what's that look like?
The typical investment that we do is $100,000. However, I have done partial units on numerous occasions simply because the investor said, look, Ken, I love the idea. Here's what I can easily come up with without any problem. Sometimes that's several $100,000. Sometimes it's, 50, right? So I think that accredited investors, by definition, know where their money is and know what they're comfortable with. They don't need someone else kind of insisting. I hope to get to a place in the not too distant future where you're turning investors away because it's not large enough. We're not there yet, which is part of why we're so appealing. We're dealing with folks that, think like we do.
Yeah, absolutely. Yeah, the accredited investor thing's always amazed me. I saw that they have a bill in right now where they're trying to make it where somebody can take a test and qualify to be accredited investor as opposed to making all the financial levels, which I think would be great because at the end of the day, how many rich people that are dumber than a rock when it comes to their money, and then how many people that are trying to do better for themselves, and opportunities like this could be the answer, but because they don't financially qualify to be accredited, they can't get in. But what if they're smart enough to where it does make sense for them? So I love it. I love you're willing to work with, and talk with more people like that too.
Well, one of the keys of the right target is when you say, well, what's your net worth? They go, I don't know. Ask my guy. That's the guy, right? I don't know. Ask my guy. So yeah, and it's truth. Someone else usually knows where your money is to a greater extent than you do. You run the business day to day. You know what the payroll is and things like that. But overall assets are generally run by your your professional CPA, whatever. So
I was asking real fast, Ken, you mentioned mobile home parks, so therefore I'm wondering if the system's a potential replacement for existing ill-performing septic systems.
yes, not only is that correct, it's not only going to replace the existing what they call passive systems. This will allow for rapid, incredible expansion of rural and exurb properties, including luxury home development. Look, I live in the hills of Western Pennsylvania, 20, 30 minutes outside Pittsburgh. They're building $1 million homes in my community. I can buy a 50-acre lot, $400,000 I can buy it because there's no connection to sewer. If you buy one that has a connection to sewer in my neighborhood, it's $3 or $4 million for that size property. So this not only allows for the replacement of failing sewer systems, but it can allow for brand new developments very rapidly, as fast as you can break ground. These systems, you talk about clean water in hours, right? I mean, weeks from order, days or weeks from order. And eventually, part of our expansion and growth, we want to create a warehouse. We want to create standardized systems. Now, the mobile home park units will allow for that, right? Because they are all within 90% of the spec of one another, right? So they can literally sit on a shelf and simply be plucked off when the guy says, yes, I'll sign a contract. They're already funded by investors, right? They're already fully built and ready to go. They've been tested, they've been watered, they've been dewatered, and they stick on a shelf. So yes, to answer your question more fully, to replace existing failing septic systems, to dramatically expand rural and exurb property development without the need to ever perk a property, okay? I think that's even potentially more exciting.
We're so excited about what's going on because, we're the 16-year overnight success. It's quite an amazing feeling to be making it, and that's a whole separate story, which I'll be happy to tell you guys.
See when the movie comes out.
Exactly.
Have you guys installed any within city limits? If there's enough land?
Oh no, absolutely, we do. For example, breweries, car dealerships, all kinds of users out there are. Yes, it's very useful for this out migration that's happening and so forth, but there's conventional users that are stuck with. There was a brewery in the East Bay of San Francisco, and the local city was requiring it to truck its waste to another county. We can't take your effluent, excuse me, right? And it's not the fault of the utility. They're just completely overstressed, can't take it. This is happening across America. It's a silent disaster, and we're here to solve that. It's a growing movement. There's a unicorn called Gradient, which you can invest in. Again, you can't invest in it, but they are taking the high end. They're taking the PepsiCos of the world, and they're doing a fine job of it. We're the middle ground, of which there are many, many more, and we plan to make it like hotcakes for water treatment.
When I speak with investors, I do this equation. Water as a service is not new. It's been done for years and years and years. But in order for it to function in the previous iteration of it, you had to be processing millions and millions and millions of gallons of water a day because you're going out to a location, you were digging a giant hole, pouring concrete, laying pipe. That's a building. And it's $1 million invested in the structure before you get started, right? So if you're not pushing out millions of gallons of water a day, you'll never make your money back. In addition, if that client were to fail pay at any moment, it's a complete loss to the service provider. Our drag in, drag out modality, that's just a box, right? It's brought in on a truck. Anybody can avail themselves of that. And if they are like some locations where they may have shaky credit, you could literally just add additional security deposits, like a renter you really like, right? But their credit scares you. You charge an extra month or two security deposit. And if they don't pay, they take it away. The truck that brought it in, it takes it out. So here's the major difference with water on demand versus other similar asset. Real estate, there are no vacancies, there are no foreclosures. None. Okay. And with oil and gas, there is no exploration risk. Every time you go to drill a new hole and you decide to throw your money with the oil company, chances are they're right, but they could be wrong. Right? And you could end up with an exploration risk, right? That doesn't exist here. Every place the system is going, they already have a major water issue where large volumes of dirty water needs to be dealt with. So we're kind of coming in after the mess is made.
Yeah, I gotta become better friends with you guys. If we ever have an end of the world event, the first people that go are the ones that run out of water. So I'll be hanging out with you guys. We'll be set there.
They said an EMP, if an EMP were to hit, blah, 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 blah. The first round of death, I hate to get, crazy, but the first 90 days. And that would be from dysentery, right? From, lack of clean water. Now, of course, no one's planning on that, but there's only so much bottled water to go around. So the ability for end locators, 90% of where the water pollution comes from, to be able to deal with it themselves, it really does bend the curve on water pollution. When you think about it, Pepsi and Anheuser-Busch, they produce tons and tons of water. They have the capital to buy their own systems. They have the capital to employ all the engineers they need to run it. The small business doesn't have the capital and are responsible for probably 90% of the dirty water. It's an order of magnitude larger business. This is Joe's Tires or Sam's Farm, right? And you go, look, here's the solve to your problem. Here's the money it saves you every month. And you've got no risk, just sign a contract. Great, where do I sign? Now, here's one of the best parts of this model. We own the asset. We own the contract. And now I have a multi-decade relationship to the end user. All of the business expansion he does will be a part of. And if anybody's ever sold anything for $1 million, you know, being one and done is hard, right? The good news is you got the sale. The bad news is you're out of business again. This annuitization of these systems, you know, turning them truly into private cloud-based utilities, the long tail that produces is going to be very, very attractive. As we graduate later, will be also extremely bankable.
My big picture on this is that all assets today are highly manipulated. Gold, oil, everything, even Bitcoin, you know, the ETFs came out and everything went down. So mature assets are being manipulated all the time. Water is early. We created it into an investable asset. It's steady and it's not being manipulated. Now is our opportunity to invest in this.
It's awesome. Well, Riggs, Ken, appreciate you guys. It was really cool. I love what you're doing. And I feel like every time you come on, you guys just, you know, are bringing new stuff, and it's really been cool to watch. So congratulations on everything you're doing. And I'm sure this will really help a lot of lenders, you know, be able to move their money and explore this cool opportunity with you guys. Thank you, gentlemen.
That was a really interesting interview. And with that, I am taking us into the freewheeling discussion.
Yeah, so that was just a couple of weeks ago. And you know, it was great. You and I just bouncing back and forth, kind of do the, you know, kind of coming at it from different points of view. We were essentially echoing each other, but from kind of punching from different angles, right? I wanted to make a comment. I even made a note to myself here. That video, when I first saw that, I was blown away about the soil regeneration. Regenerating soil in days, what would take 400 years. By us reusing water, we prevent 400 years of what it would take to recharge the Ogallala aquifer, for instance. So bending the curve on water reuse, water regeneration, if you will, right now is an absolute must. Now, what I did notice, what I got the impression was from that video, it looks like big agriculture, you know, kind of big food, that they're pushing back pretty hard against those folks, that, you know, they're getting that kind of big brother interference, you know, the government coming in to, you know, kind of mop stuff up. And, you know, it's funny, I get questions, and I just had a wonderful couple from the Private Money Club, very smart couple, is they had asked, well, you know, what happens when the government decides that, you know, you're inconvenient? I said, no. They're embracing what we do. And, you know, so these folks, just so you know, the Private Money Club people, they think like you and I. Like if we had those, you know, those conversations we have, that's how they think, right? You know, and it's kind of like, you know, you got to protect yourself because they're going to swoop in and do stuff. And that's a mind blower for them because like, but this is so, yes, but they can't handle it. It's a liability, right, for them, right? Removing that liability, removing that burden, and removing the administrative strain of handling it is just incredible for them. So not only are they not going to, you know, roll in on us, they're embracing it. Now, we may get to a size where at some point this is functioning on a large enough scale where we catch the attention of someone who wants to, you know, do a strategic acquisition on us or some sort of strategic, but that's a very, very pleasant situation to be in because we would have a lot of control of what happens next. Of course, I'm a little over my skis, but you get it.
Yes. And what I wanted to do was cover the epiphany we had this week, AJ, and, you know, how it clarified our position and so forth. So feel free to, people have heard from us for over a half hour.
It's funny, right? And those of you that are repeat visitors to the CEO briefings, you've heard Riggs talk for years at this point, but at least the past few months, about how important water reuse is. And I've heard it and we've talked about it. And one of the things that is an interesting task to try and help people understand the concept behind water on demand and behind what we're trying to achieve with modular water systems and PWT and containerizing and decentralization is how do you bring people up to speed educationally so that they can understand the problem and understand more completely our solution. And so something clicked this week. We were on a call and Riggs was like, it's water reuse. That's the benefit, right? And he said this over and over and over, and it finally clicked in my head. And I'm like, this is the way that we can communicate to people. Because we get people that are concerned all the time. You know, we'll get comments and feedback and things like that. Oh, you know, stop trying to hog up the world's fresh water and do all these different types of things because they don't understand that we're treating wastewater. And our goal is to help further reuse and heal kind of heal all of these different businesses and their contributions of pollution to groundwater and all these other places. And so when we say, look, it's about increasing dramatically water reuse. It's about water recycling. It's about saving the planet through that mechanism. And they go, okay, so I understand that we need to recycle water. Everyone understands it. You got your droughts, you've got your water rationing, right? You've got people that are forced in these situations where they're fighting for water rights all over the country, you know, and that's just in the US. And you see just how poorly we manage all these things. And you go, okay, we need to focus on water reuse. They're like, okay, I get that. How are you going to do that? Well, the best way to do that is to enable people to be able to recycle their water at the point of pollution. And people go,
it's the only way.
Yeah. And they go, okay, why is that the solution? Well, because your centralized utilities can't even handle the wastewater they're getting, much less facilitate recirculating that water to where it needs to go. You need to handle it at the point of pollution because it's the only way. Well, okay, well, how do you do that? It just so happens we have these really nifty containerized water systems that apply to a myriad of different industries and solve a ton of different problems that we can put right there on site, right? And there's a lot of people that can afford that. And for the people that can't, we're also developing the fund for you to be able to invest it. And this is how you help. You invest in the fund. It allows us to create more of these containerized systems, give them to people or lease them to people that can't afford them outright. And that's how we generate not only the ability for reuse, but also the ability to create the new asset class. And going from that place backwards to how we've been explaining it just makes so much more sense to everyone.
You could tell he can hear me through the walls, I guess.
So good.
So look, one other thing, AJ, and you went through the logic, you know, kind of the logic state of it. But there was one part where it's actually simpler. How do you do that? When the question is, how do you do that? The answer really simply can be, we already have.
Right.
We already have, because I think the public views this as aspirational,
right?
As some future ability to develop. No, dude, they've been doing this for decades, but it's been bring it to a central system, you know, blah, blah, blah. You know, that is the part that is broken. The ability to have, and I love Jim's term for it, distributed utility. Right, to have a distributed utility. So to be able to deliver individual systems to individual locations everywhere there's large amounts of water being made less than, you know, in a place that needs
distributed
to be.
utility. That was the interview with Behrens, right?
Huh?
That was Jim who?
Oh, no, it wasn't Jim. You're right. It was Behrens. You're right. I apologize. You're right. It was Behrens.
Literally, the Behrens reporter got it and fed us a soundbite as to what it is. So you definitely.
That was good. Well, but isn't that wonderful when the guy gets it so good, he actually shows you a piece that you didn't think of? You go, oh, crap, that was great, you know? So what I was going to say is the ability to treat these things at individual points of discharge. At every place you're treating water, there's an opportunity to reuse it.
Right. Mm-hmm.
Water is reused in one tiny location right now, maybe, you know? The idea that it's going to be even partially reused at tens of thousands, tens of millions of locations. the water reuse, the bend of the curve on wasting water at that point is incalculable. How much we've bent the curve at that point. And of course, the fact that you're returning it to wherever it came from in the state that it left,
right,
that's pretty good too.
Right. I mean, and again, you keep kind of going through kind of the explanation, and I think that that's one of the most important pieces of when you say, okay, well, now I understand the problem and what's your solution. The fact that we've been doing it, right? The fact that we've already developed the solution, the fact the solution's in place. One of the cool parts of that last Money Club interview was when they're like, hey, can you actually do this and replace septic systems? And it's like, we have in Colwood, an entire town had septic, and they are now running on one of our systems.
Or worse yet, not even septic. How about the passive systems, the poop lagoons?
Well, I know, but I mean, when they say, what about this application? And we say, we've done that.
Yeah.
Right.
Done it.
Just down the road, right? You mentioned dealerships. Down the road from me, one of our local dealerships has a system. And not only are they treating their wastewater, they're recycling it into their toilet water, right?
And
they're getting another turn on the water.
Now, to also paint a picture to the property developer, that's in a town called Mars, PA. Mars, PA is a very affluent.
Yeah,
it's right near Cranberry, right? It's like Murraysville.
It's where the Pittsburgh Penguins train. To give you an idea, it is a very nice area.
Right. But this place just was in a remote enough location where the guy paid virtually nothing for the commercial property. So the savings for the building itself could have run in the millions. Right. And the idea of developing property in exurbia, I live in export, right? The sewer ends where I live. There's no public water beyond me. It's all, wells and stuff like that. So if I want to buy that track, I gotta put one of these systems in. But it's literally a $3.5 million savings, before I break dirt. So to a property developer, I believe that this will become. There's a natural migration. Riggs and I talked about this during COVID. A natural out migration, right, Riggs? People were leaving the cities and they were moving to the suburbs and the exurbs in the country. Well, that's somewhat stymied by the ability to build new fancy homes, right? Because they want to live in the country. They just, they need 8,000 square feet.
Well, it's glamping is what it is.
It's glamping, right?
Yeah, FHA requires a certain lot size before they'll allow a septic these days.
I think it's half an acre.
Yeah, so that limits you. Daryl Polston says, in north central Texas, water reuse to the Trinity River Authority, DFW, wastewater is discharged into the creek to flow down the river. Then they pump water back north to fill the lakes that provide drinking water. Developers are required to pay an assessment fee of $5,000 per meter to join city utilities. Is that a cubic meter of water? That seems like a lot.
Maybe $5,000 per meter of pipe.
Yeah.
I mean, that can run millions.
Yeah,
but it's also what he just described is exactly ass backwards, right? It's the most inefficient possible way of doing it. No, what you're trying to do, you're trying to take the centralized facility and make it make sense.
Well, okay.
It doesn't.
I'm not dissing it. Daryl says per water meter. In other words,
per water meter.
Per cubic meter of water.
Okay.
$5,000, $5,000, $5,000, $5,000, $5,000. I think we can blow that away. We should do a case study on that.
Yeah.
We should do a case study.
We should get some of the some of the stats on that and put up what we would propose, our proposal for it. You could make that an SOP for building in the outskirts.
Yep.
It's per measuring
water.
For the measuring water meter, not cubic.
All right. Well, we'll find out more about that. Either way.
It still sounds outrageously expensive.
I think that independence and self-sustainability is where it's at. Anyway, I'm going to thank you all. It's been a very fascinating briefing as usual. And I hope to have more news next week about this Kevin Harrington opportunity, which I think will be transformative to our public profile. Kevin is very, very excited about what's coming down and his opportunity to help. So we'll see how we go.
And I'll be going down there in 2 weeks.
First videos start being shot 13 March.
Absolutely.
All right, y'all. Well, thank you. Thanks all for joining us, and we'll see you next week. Brad C raised his hand. We only take comments, not raised hands. So if you want to make a comment quickly, you can do so.
Yeah, make your comment. And while you're doing that, I will just do the weekly plug. Don't forget to fill out your surveys. I personally read those. So please provide feedback on things that you think provide value and things you'd like to see in the briefing. And also, if you'd like to talk to Ken, that is one of the easiest ways to do so, is just adding your info right in there, and it shows up in the inbox immediately, and we will make sure we get back to you. So please fill out those surveys.
Fill out your Zoom survey. Thank you all.
Have a good night.
Have a good night, and see you next week. Do join us.
Good night now.
More exciting.
Everybody.
It gets more exciting all the time.